Okay, everybody, here we go. It's me, Gregory Mannarino. It is Wednesday, November 9th, 2022. Here's the story with the markets. Let's just put this together real quick. We got some very interesting news out of the Wall Street Superbank about gold, a couple of other things going on. So right now there is some uncertainty here with regard to how the elections are going to play out. Markets not liking it very much. You got stock futures under some pressure. You got the usual knee-jerk into the dollar, so the relative strength of the dollar is higher. So, look, you know how this works here. The market reacts off of every freaking slight things that may occur when it's unsure of how things are going to turn out. Well, what does it do? It generally falls under pressure here, and you get that knee-jerk into the dollar, just exactly like we're seeing right now. Okay, 10-year yield 4.16. Let's see what happens with that. I don't care. Honestly, look, in the grand scheme of things here, Democrats, Republicans, what the freak ever, every freaking thing hinges on the debt market remaining stable. And in my view, gauging from what central banks are doing right now, I mean, they're absolutely involved in a Herculean effort to kind of give the illusion that this illiquid market is somewhat liquid. I mean, look what they're doing. You and I realized this from I don't know how long ago. This reverse repo program, it's very simple, people. It's institutions passing vast amounts of cash, trillions of dollars, back and forth overnight. And this is done for one reason and one reason only, to fool the market into thinking that there's more liquidity here. And this has been going up and up and up and up. It's just not going to stop. And it can't stop because, again, what central banks are trying to do, again, is trick the market. And no one's talking about this, what's really going on. And this is a global phenomenon, people. We understand, you and I, that, look, like I said earlier, Democrats, Republicans, whatever, dog shit, horse shit, whatever, okay? Everything, the entire function of the global economy and the global financial system, everything you hold to be true or believe is true hinges on action in the global debt markets, period. All right, it won't matter who's sitting in whatever freaking chair you want them to sit in when there's an implosion here in the debt market, and that is going to occur, period. So, get all bent out of shape all you want. Believe me, I read the comments on my post-market video yesterday. Get whatever you want. Go focus over there when you should be looking over here. They got some of you by the balls. Okay, I'm being dead serious here. It locked into this whole polarized environment about who sits where. It don't matter to me at all. To me, it's all a shit show. It's the central banks running the entire world collectively. They are the government. And once you realize that and you understand that everything else is just theater, you're going to be a lot better off, honestly. Anyway, so with that said, so futures lower, 10-year yield 4.16, knee-jerk higher into the dollar. All right, so right off the bat, it doesn't look too promising here for the stock market, but what have they been doing? Look at what they've been doing. They float out, the Bank of Canada here, the Central Bank of Canada, to say, hey, you know what? Central banks, we're going to start, easing back here on our aggressive stance with raising rates. And then yesterday, markets under pressure after being higher, the IMF comes out here with, guess what? Inflation might be peaking. It might be. We've heard this repeatedly. Now, this morning, they floated out Fed President Williams here. Now, Fed President Williams is another one of these puppets that they float out on a regular basis. Now, this is what Williams had to say, okay? It must be the truth because he's a Fed president and he would never lie to you. So Williams here sees inflation stabilizing moving forward. Stabilizing. Let's see. How about there's no way that's going to happen? The lie is going to be that inflation is getting better. Inflation is stabilizing here. But of course, it's just all part of the game that is being played on the minds of men and women to keep them lulled into some sense of normalcy. And things are going to get monumentally worse. Now, with that, we got an interesting piece of news here out of Goldman Sachs. So Goldman Sachs is saying that they expect to see gold prices rise substantially once the Federal Reserve starts to ease back on their aggressive rate hike stance. Now, what's my take on this? I don't care. I'm looking at one thing, and I believe most of you who follow this blog are also looking for what I'm about to say. This is going to change all dramatically here, okay? Debt market meltdown is going to happen. As I said earlier, there's a Herculean effort going on here. Central banks to fake liquidity to give the illusion that there is some sense of stability here in the debt market, for which there is not here. If it were not, think about this. Let's just put this out here. If central banks right now were not involved in passing vast amounts of cash back and forth between institutions overnight, just for a nanosecond, envision what would be occurring here in the debt market. It would be a full-on, complete and total meltdown with bond yields spiking around the world so fast that people's heads would spin around like the freaking exorcist, and that would crush the stock markets, which is going to happen anyway. What they're doing here is picking a time and place when they're ready to pull the trigger and let this entire thing just implode and take a vast amount of the population with it. You understand? So to me, looking at the price action of gold and silver here, first of all, it's a rigged game. You know that. The hard asset is being priced off of the derivative. It's upside down. It's an insane situation, but this is how Wall Street has their stranglehold on the price of physical metals here. It's just the most twisted thing in the world. So when you hear a super bank like Goldman Sachs say that they're expecting to see gold prices rise substantially once the Fed starts to, ease back from their aggressive rate hike stance here, okay, that's lovely and beautiful, and I think it's nice for us to hear, those of us who are betting against the debt, who are becoming our own central banks, who understand that gold and silver are real money and the rest of it's just credit. You understand? I think you do. At least I hope so. So to me, all I care about is, and I know is going to occur, is the inevitable implosion here in the debt market. And cash is just going to move. It doesn't grow money wings and fly away to money heaven or wherever. It just moves from one set of assets into another. Debt market implosion here is all I am anticipating for the price of gold and silver and commodities as a whole to skyrocket to incredible heights, more than people can possibly imagine here. The dollar, being a unit of debt, is going to crater as well. So you can understand, being that commodities are priced in dollars, how this is going to work. You understand? Anyway, very simple. Cash is just going to move from one set of assets into another, and that's when you're going to see the price discovery mechanism actually work. Right now, there is none. You know my take on this, people, better than anybody. Today, there is not a single asset that has a price discovery mechanism behind it. When you have central banks that are doing what they've been doing since the last meltdown, artificially suppressing rates, realizing that everything derives value, every asset derives value from what's occurring in the debt market, being that we have a debt-based economic model and the Fed is rigging everything to the highest order, well, it's so easy to understand. You got it? I think you do. So on the back of what's happening here this morning, this uncertainty in the market, stock futures low, you got cryptocurrencies getting blasted this morning. Bitcoin just over 17,000. Gold and silver actually under some pressure here. And that's the story. That's where we're sitting today. And we're also hearing some other news, and this is not going to be a surprise to you, that corporations they've already announced that they're going to be cutting jobs, but now they're upping it. They're saying, well, you know what, we're going to be cutting jobs, but it's going to be more than we thought we were going to. So their projections for job cuts moving forward are going to be more dramatic. And that's because our economy is so strong. You know that, right? The lie that's being sold to you by the current puppets in power here. And some of them are going to remain, some of them are not going to remain. And in the grand scheme of things, I don't think it matters at all. Maybe at the local level it does. But look, you know the story here, people. It doesn't matter who votes. It matters who counts the votes. And they're going to make sure whoever they want is there. And at the same time here, it's the central banks running the economy and the financial system. They run it all. They're the ones also who decide what kind of information gets dispersed to a public who has no clue as to what's going on here. Anyway, I do want to hear from you. What do you think about all this? So we got Fed Williams here. Inflation is going to stabilize. Oh, it's going to stabilize. No, it's not. It's going to keep going higher. It's got nowhere to go but higher, according to every metric you want to look at, including the Federal Reserve's favorite indicator, personal consumption expenditures. Look it up for yourself here. Corporations cutting more jobs. Goldman Sachs talking about the price of gold rising substantially. Look, good, fine, and perfect. Of course, we're all looking forward to that, but it's really, everything is about the debt market, every freaking thing here. Anyway, that, my friends, is where you and I stand. I think you and I know exactly what's going on. We're so far ahead of the curve, it's frankly ridiculous. And we're gonna stay there. All right, look, this guy right here loves you a lot. I mean that. And I will see all of you later on, and that's gonna be just actually even more lovely, because we're gonna get a better picture as to how the political spectrum is gonna play out. Like it matters at all. I don't believe it does. You're entitled to your own opinion, of course. And we'll see what else they pull off here. Keep your eye on the 10-year yield. Keep your eye on the relative strength of the dollar. All right, keep your eye on the MMRI. Free to everybody. Link in the description of this video. I will see you later.